Hey guys, this is Andrew for TRENDLINES.com. So very quickly, let me introduce myself for those who are watching my videos for the first time. I've been working as a professional trader for the past 6 years in Hong Kong, and right now, guys, I'm doing some technical analysis on YouTube because I want to pass the knowledge. I want to show you everything that I learned actually myself, and I want to show you how to use it yourself. So I do really hope that my explanations are clear enough and that this is helping you. So in today's video, I want to make a huge update, guys, on GameStop because we are entering the third wave. Let's get into it. So what is the situation here? Clearly, it's looking very good, guys. I did my last video. I'm always starting on the forward time frame, guys. It's the most important time frame where you have the best reactions in terms of moving averages, in terms of MACD, all those indicators that depend on the time frame. They're gonna give you cleaner signals on the forward time frame. The daily time frame is very good as well. The reason why is because you have both institutional clients and day traders that are using those time frame. So here I did my last video, guys, around the 170 level, and I told you that we are very bullish. I told you that we are just completing the first wave of an impulse that is starting here. We basically had this whole complex correction, guys. For those who are watching my videos for some time, you know that I'm telling you this for a very long time right now, that I identified this complex correction that was a 333 according to ELLIOTT wave theory. That is just here a zigzag, another zigzag, and a flat ABC, ABC, and ABC. So this whole correction is now complete. And how I know that? It's because we're having here something very impulsive with finally the volumes kicking in. So it's not very big yet. Let's be honest. If you look at the daily volumes, it's just the biggest volume we had in the past 2 months. So this is for me good enough, but it's not the volumes, like it's very low compared to the volumes we had when we had this very strong moves up in January and even in March. But it's looking good. And so let me just come back here. I have a lot of things to tell you guys here. So first, I was telling you in my last video that here this is finally impulsive and that it looks like, for me, the beginning of something, of a move up. So each time a move up is going to start, you always going to have an impulse at the beginning. So once you spot one, so here I spotted this one, you know that this is only the beginning of something. And you know that this move is probably gonna be the one that is breaking some major resistance levels. And here I told you this already, like I think 2 or 3 weeks ago. This is the trend line we wanted to break, guys, just like we did for AMC. Look, AMC is just one step ahead, guys. AMC broke this trend line, so I connect the high here and here. It broke this trend line on the 23rd of April. That's why I'm so bullish on AMC, and we are one step ahead. We are already in the third wave of this new 5-wave development, whereas on GME, we are here only breaking this level. All right, so we only completed the first wave here. So what we can expect, guys, is just like we had for AMC, some kind of a correction here, which is completely normal. We're gonna go back at those level, maybe around 175 in 10 days, maybe. So this is only one scenario, but I mean, if this happens, this is totally normal. And if we do, then here we're gonna have our third wave starting. The alternative scenario, which is more bullish, is that here we keep going higher. So to answer this question, so each time you need to check how many waves you have in your waves. So here 1, 2, 3, 4, 5. This is working. Here 1, okay, 2, okay, so it can be complete. Okay, I can find a valid counting where it is complete. I could also, maybe this is a 1. I need to zoom in more here. I'm doing this right now with you guys. I haven't done this before, and I'm trying to find, so ELLIOTT will never give you only one scenario. It will always be a few scenarios. So, and you need to find the one that is fitting the best. So here I have 1, 2, 3, 4, 5, you see, so this might be a 1. then here we correct 1, 2, 3, 4, 5. Okay, so this is actually maybe better. So I'm not sure here. So in both cases, I think we're gonna have a small correction, maybe to the 200 level, maybe deeper if actually this first wave is complete. And we need to know where this first wave is gonna go. So once again, guys, one way, for example, to know that the wave is complete, you go back to the basics, you go back to trend lines, and you connect, for example, here, this trend line is the one that I'm gonna check to know if my first wave here is complete. So let me get rid of this. So for now, we are still in this wave development. Okay. So let me go back here. And as long as we stay above the green line here, we are bullish, guys. So we might go here. It's possible as well, you know. So let's see, but ultimately we're gonna correct. So the higher we go here, the lower we're gonna correct. So if we actually take back, you know, the 216 level, I told you as well, guys, about this level, that it's a level I wanted to see taken back. And for now, we took it back because it was the maximum level I had here. You see, on the 26th of March, we actually traded, we had a high at 216. And all this area as well, like, was consolidating around this level. So now the next one for me is the 290 level, guys. So this is what is good about, like, if we take back the 216 level, it would mean that then we still need to correct. I don't imagine the first wave goes there. All right, let's be honest. The first wave won't go there, I think. So we're gonna have some kind of correction before the 290 level. But let's see how high we go on this first wave. Let me go back on the hourly time frame. As long as we stay above this trend line, guys, we are still in our first wave. So let's see where this brings us. Once again, we might correct right away. It wouldn't be a problem, just like we did with AMC. So it's possible that we go here, we get rejected even brutally, and then we're gonna go do the third wave. So here, let's see, we need to see more data. We need to know which levels we're going to reach. But ultimately, we're gonna correct little bit and then do this third wave. That is gonna involve even more volumes. But for now, the fact that we broke this red resistance here, that for me was the biggest one to break. You know, the other ones, they are, I would say, some levels that we need to take back, that we're going to come back to correct, but they are not major resistance levels. They are not some levels that, you know, can tell us that actually we turn bearish. If we don't take back, for example, this one, it would be really something that makes my whole analysis different. So I'm very, very happy that we finally take it. So once again, let's confirm first. It's confirmed on the 4 hours time frame, but is it confirmed on the daily time frame? Not yet. All right. So I'm here celebrating a bit early, but I'm very confident. For now, we have taken back this level on the daily time frame, but only one closing level. So we need a second one to be 100% sure that this level is taken back. And if we do, once again, guys, expect some small correction. So depending on how high the first wave is going, the correction might be, you know, deeper or not. And even, like, guys, I'm giving you here a lot of information, I know, but I think it's important that you know, you can then use fibs to enter this trade. All right. So you need to wait for the end of wave one. Let's say wave one goes here to 220. Okay. Then to enter with fibs, you can buy the 38.2 retracement level, the 50 and the 1.618. If it goes below the 1.618, it doesn't look good. I usually, you know, even buy the 50, the 61.8, and I stop loss everything below the 0.786. All right, so you can use those fib retracements to enter your trade. So even a correction to this level, to the 170, would not be, for me, surprising at all. All right, so we are bullish on the long term. We are still bullish on the short term for now, as long as wave one has not complete by breaking its downward sloping trend line that I showed you guys here on the hourly time frame. We are bullish. So let's see where we are going, but don't be surprised if we have a small corrections. You know, that's all I'm saying, and it would be actually a very nice buying opportunity. So let me quickly show you guys the data that we're having on GameStop. So as of the 14th of May, we're having 12 million, so same amount of short interest in terms of number of shares. What is the option data telling us? So GameStop was at 170, so we had 5% of synthetic short interest at 215. We are having 8%, guys, and I checked this, 800 strike. That is just insane. It's growing, guys. We have now 3 million shares here of position. So you can see that the synthetic short is still driven more by the 200 strike than the 800, but things would change if we go higher. Say we go to 350, you can see that the 800 strike synthetic short position is growing much faster than the 201. And this is what is going to create some gamma squeeze actually on the upside. Is this crazy amount, guys? Once again, I've said this many times, but it's very important to remind us, guys. We usually don't have this kind of shape on the option market. Usually we have a concentration around the money. And on GameStop and AMC, we're having this like very upside calls that are actually heavily bought by retail investors. And this is what can create a gamma squeeze on the upside. Yeah, one more thing. So now we're having 8% of synthetic short. So if I add it to the regular short interest, which is 20%, we're having 28% of total short interest, guys. So it's the highest level we've seen since the first squeeze. So you can see that hedge funds, they don't want to let this trade go. They're still selling. For now, to me, it's not enough, once again, to create a squeeze. My scenario would be we first go to 800. Then they're going to short massively, guys, at those levels. And then it might squeeze. So to insane levels, of course. For now, we are just developing higher in a kind of normal way. But the 1 week DTC, as the volume has not increased a lot, is very high. Actually, is the highest level we've seen same since February. So you can see that the pressure is actually growing here. Those numbers are becoming hot. So let's see what is going to happen. But once again, guys, for me, we are only in the first wave of our third wave. So I expect some strong moves up to come soon. So that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button. So you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.